Hey, what was that noise? What? Hey, wake up, guys. Hey, zombies, wake up. I know it's been, 3 weeks since we've done this, and you guys turned into zombies between.
Hey, gotta do something.
And I've won every single week.
And Daniel won all 3 weeks, so I should have given him 3 points this week. That was
we were hearing. Oh, illegal! Throw the white flag, red flag, blue, yellow flag.
I think we're hearing him last in the
all 3 weeks. All 3 weeks he was winning. So,
yeah. Congrats on that.
That at least deserves 2 points.
So I mean, we could have done it where it's like, hey, if you were winning 1 week, you could have taken that too. But all 3 weeks he was in the driver's seat winning.
One stock, one win, in my opinion. But
I told Royce yesterday. That if we push 1 week, that's fine. But if we push 2 weeks, you got to be able to collar in your win.
Yeah, for sure. Absolutely.
No.
Remember rule changes. Say, wait a minute, though. Rule changes happen at the beginning of the seasons. We've decided that already. So you can't, mid-season, throw in some new rule.
Okay.
Just can't.
Okay.
Are you sure?
I was going to say, I mean, we made up the game. We can kind of change the rules whenever we want.
Anyway.
So we can kind of do whatever we want.
I'm taking the role of Wayne Brady, just so you know. Wayne Brady, go ahead.
Royce can, though. I don't think we can. I think Royce can.
Can Bill? Come on, let's go.
I like Wayne Brady. Are you going to sing for us, Wayne Brady?
Oh, yeah.
Well, let's go ahead and
have to choke up. Never mind.
No.
Let me break up the banter with the stuff we have to say.
I didn't say.
All right, here we go. No, we're not. Here we are. No, we are. Okay, here we go. My guests are Daniel Hopwood, top right corner, ex-institutional wealth manager, Josh Morgan, a.k.a. JPM.
The real Josh. We like
the
this
banker.
Josh.
That's right.
The OG.
The OG Josh, for sure.
And our founder and CEO, Royce Wells, which I wish we could have shown you the tape that we had right before this, as he was imitating.
That is career-limiting move, sir. That was a very career-limiting move.
But for $9.99, if you'll just send, never mind, just kidding.
You know what?
I'll give you a link down in the comments on where to get that for $9.99.
Just put your Bitcoin wallet address in there.
Don't forget to click like and subscribe. And the little button, the little bell thing. So anytime we have a new video, it'll show up.
I'm going to have to get Mr. Beast to come on this show and then do something to you guys.
He can give us. We'll all stand in like it's still for 4 hours until somebody drops, until the last person is there, and everybody else is tied for $1 billion. Okay, here we go. I got to finish this. Okay, I'm the resident retail investor.
I was wondering when I was coming in.
I know. We have these little things that jump in the middle. I'm the resident retail investor who's had a decent week and now a bad week again. Called names like APE and Dumb Money, and I do throw poo at investment brokers. No, I'm just kidding. By the way, we're not financial advisors. This is not financial advice. This information is provided sheerly for educational and entertainment purposes only. Please always consult an investment professional before making any financial decisions. All right. And by the way, out there, Bob, sorry, we are not live. You're getting this recorded.
Right? Sorry
Someday, Bob, we might be live, okay?
Someday.
On Twitch. It's my uncle who just started watching these and is also an investor, so we just saying a shout out to family, I guess.
Saving shout outs for whoever wants them.
That's right.
Does he know about your new necklace?
Yeah, he'll make fun of me for sure, but just like you're doing right now. And
we would never make fun of you.
No.
Okay, never mind. You never know who the person that gave me this might be watching. All right, here we go.
Oh, that's true. That's true. Pee Wee Herman, we applaud you.
But this is not in Spanish though, so we'll move on.
No.
And I'm not going to repeat in Spanish. All right, here we go. This is my camera's going in and out. It just is not like this whole red background. The reason this whole red background is for the very first thing we're going to talk about, which is the markets. And everything was about 0.5 down going into the NVIDIA call. which we know everybody, all the investment houses already knew probably this morning what was going to be on the call because they share everything even though they're not supposed to. I'll move on that. There's never insider information before the CEOs release the information. Never. The only people who don't know is retail. Everybody else does. All right. Yep. So anyway, to Daniel's point here, bond auctions. Yes, they've been terrible lately. So do you have any more information on that, Daniel?
No, I mean, it's just a signal in kind of like investor confidence in the, we'll call it the assurance of U.S. debt, right? And so it was one of the weakest in, a really long time. And it was kind of on the back of them passing this big bill, extra Trump. What?
Big.
Oh, the big beautiful.
Beautiful,
bill.
But there you go. Okay, go ahead.
Big, beautiful.
And, that, piled on with the Moody's rating downgrade, which honestly, it was like, that's actually like a nothing burger. Like the other credit rating agencies had already downgraded us like years ago. So, I thought that was kind of really just like, yeah, like that was like just a big narrative play.
No.
But yeah, so it wasn't looking too hot in that bond auction, which isn't a great thing for, investor confidence.
So it was AAA down to AAA1, whatever that means.
Yay! It's the A team.
Okay, so but as a result, also because of, I guess I'm wearing the chain for it. I'll be Mr. T. I pity the fool. I can't.
You look like you're belonging in sync.
No doubt.
Ba ba ba. Okay, see, you brought it out in me. I had to sing something this week. Here we go. So anyway, Bitcoin did hit 111, which there was a Bitcoin conference this week, a major pump and dump.
Yeah, that was one. Friday they were supposed to be making an announcement about DJT. $3
billion.
$3 billion in Bitcoin. Sure, why not?
Right.
Why not?
And then as I put in the three things tomorrow, bringing it up again, is that the banks are getting together for a coin, a dollar digital coin. They're saying it's not big news, but that's what they're doing behind the scenes, so to speak. And that's crypto. So who knows? I mean, we may just about to flip everything. Royce and I had a good conversation. This is a one-off about the fact that Digicoin is going to be something that's better for quantum computing, because the worry is that the quantum computing is going to be so smart and quick that all of those little codes that the 12 whatever is we have to have for our Bitcoins, right? That it's going to find those out. And Bitcoin is going to be basically worth nothing eventually if this keeps going, and they're going to have to come up with a better way for crypto using the technology that is the Digicoin. If you don't want to expand on that, Royce, I don't.
Oh, sure. For why not? Why not? So basically, anytime anyone is mining cryptocurrency, right? Typically, it's almost like you're playing a game of basically like Price is Right, where you're just trying to guess the combination. So basically, every single wallet address has a decryption mechanism. Some people have actually even stood up. Basically, some passwords are 12 words, some passwords are 24 random words, right? But basically, they've actually started brute forcing even the passphrases to basically try to find, and because if you can unlock it, you get access to the wallet and can basically transfer the crypto anywhere you want, because there's nothing locking it up besides that encryption key. So with quantum computer coming in, where basically things that would only take 10,000 years to decrypt, you can get it done in a day. That basically puts almost all cryptocurrency at risk, at least for the decentralized version of the cryptocurrencies. So, yep. So that means that either means at each halving, they're going to have to get more complicated with their hashes, which means it's going to be even harder to mine, or they're going to have to figure out another way to protect, like two-factor authentication, something that stands in the way of not only the brute force of finding out what the combination is to lock to the safe, but also having another safeguard measure that's in place to prevent it from being stolen from underneath. That's also one of the reasons why XRP has a clawback feature. It's not decentralized. That's what Bank of America is using for all of its internal transactions. And allows it, if it was stolen, even accidentally, and you can prove that it was, they'll claw it back and able to recover all the funds. So once again, decentralized, not so good, not looking so great, but centralized cryptocurrency, we definitely stand a chance to make a lot of money.
That is what you said, Bank of America and XRP, right?
Yep,
and
XRP.
That was one of the banks that was mentioned in that article. I forget the other two big, but just trust me, it's the big ones, all of the big ones basically. And if they're working together, then I would say that XRP is also. They didn't mention XRP.
They've even estimated that it could be worth as much as $100 per XRP by the time we get to 2027.
Yeah, and we are not financial advisors, but we're just having fun talking about it right now.
Just talking. And guess what? XRP is a commodity because it's a currency. Hey.
And I don't own any. We need those things like CNBC.
I cannot say that. I cannot say that at all.
Yeah, I was going to say, it'd be like those guys that come on CNBC and they go, this person doesn't own any, nor does any of his family. It's like, no, but you're speaking for the other guy that's going to speak for you later. All right, we can move on. I just hate these little end arounds they do for people. And just everybody do, okay. Anyway, moving on. Trump's tax and spend bill, the big, beautiful bill. So, I mean, Daniel was so in love with it before. He brings it up again as its own subject here. The big, beautiful bill, which we give a 3B rating.
Are we talking about Clinton again?
All right. I did not have. Never mind. I'm not going to say that word.
What?
I was wearing this when I went. Never mind.
Yikes.
Monica. All right, never mind.
Why we lost our syndication.
Right. He had good charisma, and Monica thought, never mind. God, let's move on. Let's go to tax cuts and increased deductions. You're saying, Daniel. So maybe bring out all my impressions. So here we go. Significant increase, Daniel said, in federal spending, 150 defense. We knew that before he was even elected, that he's going to bring defense back because it seemed that our defense was being destroyed internally. I'm not going to get into that. That's a whole nother after the bell. 70, I assume this is billions for the border, and 1,000 for each newborn. Royce, here's something else for you to talk about. That 1,000 for each newborn. You got some details on it too.
Nope, I'm not talking about anything about that.
So anyway, it's like it's like a Gerber policy, right? Isn't it kind of like that? That when they're born, they can invest 1,000, but they have to spend it by when they're 30 or something. I don't know.
Oh, you're talking about basically the 401k for children is what you're basically proposing, where it's sort of like an IRA, but or Roth IRA, where they limit what you can put in. I think it's $5,000 per year. You can have access to it once you're 18, and basically you can fully divest it at age 30.
Yes.
So it means if everyone does what they're supposed to, that means you have about 150K if you did it from basically 1 all the way till you got to 30, right? But at the same time, yeah, the limitations and the things that they're putting on it are limitations. The same thing on our 401k. They don't really want you to spend it, so you're literally getting money and you're putting it up for 30 years and allowing them to spend it for up to 30 years. So yeah, I'm out.
I mean, is this like another way of giving Americans money to put into the stock market at 1,000 each?
Absolutely, it is.
Yeah, exactly. It's just another way to pump these freaking. Never mind.
Well, you have to also consider that the 401k is only 46 years old. Only 46. So it means literally 78. Right. 1978 is when the 401k was originally invented, and it replaced the pensions and the self-funded pensions and all the other things that were in place pension-wise that companies actually were responsible for making sure that they took care of their employees. And then basically the same way that we are playing, or what I'm currently playing in the market, they prohibit that type of playing on qualified money. So it wasn't really to help you. It was to give them a loan so they can do whatever they want and penalize you if you touch it.
Yep.
So, hey, it is what it is. Go get an IUL and live your best life. Infinite banking, baby. Infinite banking.
Just off camera, by the way, is my cell phone. So I was looking up the national debt before we do this next one, which...
Hey, I like that. Give me your debt. I love debt.
That's right. Give me your debt. Give me your poor. Isn't that what was on the
Bring
Statue of Liberty?
Debt. Bring out
give me
debt.
your debt. Give me your poor. All right. So...
Love you to debt. Give me your debt.
Give me your debt. Locally, we have in Memphis. We have this weed killer guy. Let me kill your weeds.
Yeah, that's the
only
guy.
us. Only us in Memphis will laugh about that. Anyway, so I don't think he ever went.
I have no idea what you're talking about.
I know, because he really almost sounded like a predator, because he go, "Let me kill your weeds." I was like, okay, you're not getting anywhere near my house.
Almost immediately, but Daniel was like, "What are they talking about?"
You're nowhere near my house. All right. So anyway, this big beautiful bill is projected to do 3.8 trillion more to the debt in the next 10 years, which actually, I mean, the way we've been going isn't that bad. But the U.S. national debt is at 30, but we'll call it 37 because we'll round up for charity here. 37 trillion, and right now the per citizen, that's only 107,000 per citizen.
All right,
I assume that includes babies.
For your own, Josh, I might even cover yours since you were in the lead.
Okay, thank you.
Y'all are gonna make that the penalty for the loser. I'm in trouble. I'll just quit before the last day of the season. It'll roll up to the next last. All right. And like you said, the Moody's downgrade. I mean, is there any worry here though, Royce? Are we just going to keep, and you, Josh, too? Is there? I mean, at some point, when do we pay the piper? We just keep going on and on and on. It's going to be after this. That means it's going to be 40 trillion at least. And by then we'll have more trillion because the clock doesn't stop. So, I mean, where do we stop, Royce?
Inflation is outpacing it, though. So that means even though it looks like 40 trillion, it's equivalent to almost 27 to 30.
Well, that doesn't even include the Social Security and Medicare. If you throw that in there.
They'll go bankrupt way before then. Don't worry about those guys.
I think I saw you have to throw in another 20 trillion if you include that. I mean, it's ridiculous. I don't know how in the world. I mean, that's why is that why the bond?
Remember, we invented capitalism. We invented that. So inventing capitalism means we can print as much money as we want, and that's the reserve currency. And everyone's just going to say, okay, they're printing more. Let's buy more.
I guess soon we'll be printing or we'll be coining more crypto or something. I don't know when all the money's gone.
Hey, get rid of the penny, get rid of the nickel, and print as much crypto as you want.
There you go. Josh, what's your opinion on, Mr. Banker, on all of this debt? When do we pay the piper, or do we never pay the piper? And let's say in 20 years we'll be looking at 100 trillion. I mean, what's going on there?
Well, I think one of the reasons that Trump specifically is so erratic with these tariffs and like trying to drive, American made and trying to get as much manufacturing and everything that they can stateside and really trying to increase domestic production is because if he doesn't pull this off, I mean, he's essentially front loading all of these expenses. So you're getting all of these tax cuts, all of these expenditures, like all of these things that are trying to drive the GDP up. He has to get all of this done by 2026 midterms at the latest, or it's just going to end up being a giant blue wave, and all of this is going to disappear. And then if that's the case, then this is going to end up being a historic failure because you're already seeing you already see how many countries and people that we've seen moving money outside of the U.S. The whole, America first and buy America, and it's now turning into all of these other companies are now selling America and getting away from it, and then that's even more exacerbated. And the uncertainty of all of this, with him basically playing chicken with everyone's 401k, is what's driving the things like the Moody downgrade. And if the uncertainty of all of this, because if it doesn't work, it's going to be really bad. If it works, it could be just as big and beautiful as he's describing it. But there's so much uncertainty to his actions and how everything is being done that nobody really knows if this is going to work. And I mean, he's going against a lot of what the top economists in the world are saying, and he's doing it all to try to bring the GDP back to where the GDP actually outpaces our debt. So then we get to a point where we don't actually, yes, we can start, like you said, paying the piper, because we'll actually have a net surplus rather than the net negative or the deficit that we've been running on since I think it was back in 2000 or 2001 or something like that. National debt was at like 3 trillion. And now look where we are here, look at what we're at now. Right. And they just we keep kicking the can down the road. And so we may not ever have to pay the piper, but if we keep increasing the debt at this particular rate, people are just going to run away. Like, it's no longer as stable as it sounds.
Well, it did go up a lot in the last administration too.
Because all in perspective, right? So it means it's like, okay. And I say this basically because
perception is key.
But remember, like in 1978, right? 1978, 1979, a house was going for $20,000 to $30,000. You fast forward 40 years, that same house is $300,000 now. That's 10 times its value, right? So let's say another 40 years, it's not unreasonable to think that, okay, the $3 trillion that was in 2001, okay, 30 is right on par for where it should be. And maybe
that's
300.
nominal. That's not real though. I mean, that's the nominal number. That's not the inflation adjusted number, right? I'm sure if you look at inflation adjusted, it's like even more, right? Because wages, like cost of living, aren't adjusted proportionally for like that kind of thing.
But so that's
potentially
wages didn't keep up with the rest of inflation. They said the cost of living went up about 3%, or it's supposed to be about 3% annually. There's no way. If that actually increased 3% annually from the 80s to where we are, people should be making $260,000, $300,000 a year. But 6 figures in the 80s is about 6 figures now. So if you make $100K back then and you make $100K now, not much of a shift. And employers have not raised their ceilings and say, hey, this job is worth this much now. They're like, nope. If they're willing to work for that much, and minimum wage stayed at $7.25 for almost 40 years. $7.25. They raised it from $5.25 to $7.25 and then left it. And this is where we are today, right? So it's like wages have definitely not kept up with real estate, have definitely not kept up with our deficits.
And that's exactly correct. And and one of those is going to break. Like you can't keep. I mean, you look at. I think they were posting a metric the other day about how going back to like 1945, what real world economic earning was from 1945 all the way to 2025. So you're getting, what is it, 60 years or 80 years of growth, and you're at like 25%, I think is what happened. And then you go back and, to your point, look at what a house costs in 1945. You could buy it for $5,000, and now it's worth, $300,000.
Yep.
And those things, they cannot stay at the same pace. It's the same way with kind of, going back to our budget. You can't continue to just running at a deficit. Eventually that deficit's going to run out. I mean, look at we're just getting into borrowing everything, and look at what that's doing.
That's how the rich make money. They borrow. They don't spend their own money. They borrow to get there.
But it's not it's nuked the American dream.
I'm sorry?
Like, you can't just it's nuke the American dream. Like you can't just start from nothing and build your way up.
That's not true. I got a couple of programs that I can show you.
Next month.
With the arbitrage trade system, you can do
next month.
I can show you from absolutely nothing. Give me 90 days.
I think like the hard part is, and like Josh, to your point, is that like it is like, you know, kind of on the American dream point, it is like much more difficult than it used to be. But like, name me another country where you would move and have like potential exponential results of your input, right? Like you can't move to Europe. You can't move to Latin America, even if you spoke perfect Spanish, right? You're not going to move to Asia, but more specifically China, right?
Yeah.
So, and it's like, so it once again becomes like America's like the cleanest dirty T-shirt, right? And it's just becoming
backwards, backwards, inside out. Let's go.
And we're just accepting that no matter how much we wash it, it's actually like pretty dirty, right? And there's just like things that aren't going to come out of it. Because, you know, if we look at like what I put about the bond yields in here, is that the 30-year hit 5% again, and everybody was freaking out because it's like the second time it's hit that in 18 years. But if you actually look at it, it hit it twice during the Biden administration. And like, I don't think this is actually like, I think the way the media is talking about it now is a bit of like a, you know, kind of like narrative of like, oh, Trump's running up the debt now and stuff. And I do think there was an aspect of like, maybe the market did really think like tariffs and Doge had like big potential. And I think that, you know, we're seeing like, he's not talking about Doge much, like maybe the tariffs aren't working as well. And, you know, now he's, as you were saying before, like becoming more like interested in fiscal spending because of the midterms. And I think the market is just kind of realizing as a whole now, like, oh, like, yeah, like the debt situation is just not as in control of like what we thought had potential. And so now it's just going back to kind of like potentially where, you know, they want rates to be for what the debt is. And so it's, you know, it's just realizing what it actually is opposed to like, you know, being an actual like Trump narrative.
Thank you, Daniel, for transitioning to that next.
Specifically a Trump.
Yeah, you will
like,
find
it's
that
not specific to Trump. Like if you remember back in, yeah, I mean, if you remember back in 2023, 2024, in these same time frames, we're talking about, you know, Bidenomics and the Biden economy and how this inflation and like unchecked spending and all of this is driving our, you know, we're heading for a recession. You know, we're the economy is in shambles and I mean, we got Trump tweeting about how Bidenomics and everybody's doing a horrible job. And it's the same thing. And it's like, it's that perception of, you know, where's the safest, like you put your money where it's safe or where it's going to be treated best. And if it basic 5%, you know, yield is safe enough and yielding enough that it's the opposite is putting it, you know, in stocks, then yeah, I mean, it kind of makes sense that now we're having the exact same narrative that we did back then. This is just, it's the flip side. We're doing the, you know, it's now Trump's problem and Trump's fault and all this and that.
Yeah, they keep.
And that recession did come. It lasted 47 days.
It's not over.
Right. No,
and then we came right back, baby.
We keep having this.
So I'm just kidding. I'm just
fair market
kidding.
bounce.
So now I know what I'm doing for crayons.
Oh boy.
All right. Well,
Okay.
Royce. So something that I wanted you to bring up, and it doesn't have to be crayons. You can just like maybe talk about it. If you bring up the 30-year yield, if you look up US 30Y, just like where do you see it on the charts? Like potentially going, like, is this like, do we just run into like overhead resistance and we're, you know, expect yields to come back down?
Already there.
I'm bringing it up as we're talking about it, but I want to add it too also that the media doesn't say a whole lot about it, but evidently our Treasury is buying a lot of our bonds now. And whatever the impact that's going to have.
They're hedging. They're quite literally hedging.
It's called modern monetary theory.
Yeah.
No one's ever done it before, and it's where you buy your own debt.
Yep.
Hey, that means you have confidence in your country, just like a company buyback.
That is not what that means. That is not what that means. It means no one else wants to buy
confidence in your
so
banks.
Hey, but I mean, if you have the opportunity to buy it, buy it. Why not?
Confidence in your banks.
If you're going to get 8 to 12% just sitting, why not?
You're just basically doing your own.
Sorry, I don't believe in modern monetary theory. I think it's a false hope, and it leads to not a good path.
Like, if anyone could do this, anybody, come on.
Yeah, sure. Let me issue my own debt and then buy it back. Yeah, like that makes a lot of freaking sense. Like,
Royce, you going to go over this 30-year chart? Is that what you're doing?
Sure, I can go over that 30. Let me go back to that screen. All right. So this is the daily US 30 Y, right? This is the 30-year government bond yield, right? And basically it's roughly at about 5, right? And this is based on trading views data of the yield and the yield curve. So it's sitting at about 5%. And basically we're getting to the edge of the band. So bad things happen when this light blue line and this dark black line or this black line gets to the edge of the gray on our arbitrage band on our daily time frame. If you notice when it happened over here, bad things happen. So you see where we are. So think about February of this year and what we were doing, basically how everyone was groaning and moaning after the inauguration. So basically we had made it past January 20th and then everything just went to crap, right? Well, guess what? It's going to be a long summer. It's going to be an extremely long summer. Basically, support sitting at about 4.9. It may make it all the way back down to 4.84. But I'm thinking longer term, there's a very good chance we wind up back at about 4.5-ish long term. So this is not a good look for this. But, hey, this is where we are. And this is what we have to deal with. Looking at this on the monthly chart, going to refresh. Also, equally, same thing happening. So if you're doing month over month, and so that means you get one candle per month, look at this light blue line. It went under. That's our exponential moving average versus our simple, which is the black. It's underneath, and you're on the edge of the band. There is definitely a day of reckoning coming for these yields longer term. And the funny part is, and this is not funny at all, yields can get as low as 2.71%.
No, that's great. That means the money printer is back on. We're back.
You're supposed to say baby after that. I was waiting for you to say baby.
That is,
no babies here, but
that is up and to the right.
Things are looking quite ugly. So that means there's going to be a shift. So whether it's them taking it out of bonds and going into crypto, or taking it out of gold and going into crypto, or taking it out of the US dollar and going into crypto, there's definitely a shift that's about to happen. And if you caught that, then good for you.
All right, that was after the bell crayons and charts. Kind of impromptu, but we did it anyway. Because, I mean, who cares about an agenda? We just do what we want around here.
That's right.
That's right. That's right. So I'll sum it up with I forget the band.
Throw this on the ground.
Who was the band? Bangles? No, it's a cruel, cruel right? Summer is what he is saying is about.
I'm not a part of your institution.
But hey, is it now? But us buying our own treasuries, how does that affect all that?
Well,
how
that
should
means
it? How should
when
it? I mean, because that doesn't mean it's going to happen.
If you were trying to get more out, you're going to wind up getting less out. And potentially, hey, hopefully there's a break-even point where if you buy enough of them or you have enough of them available, it evens out about 3.5%, 4%. So split the baby, as they say. If we're at 5%, we want 2.5%, split the baby. Let's figure out something in between, and hopefully it's not too volatile getting there.
A kind of a one-off, but is the yen carry trade still out there?
Absolutely. Absolutely. Japan is still working on raising its rates. And so far, looks like at first Japan was basically buckling a little bit. I think its index got to 70, I want to say. If I go JXY, JXY, yeah. So JXY, quite literally on the edge of this monthly chart, notice it's the exact opposite of that yield curve that we were just looking at. It's at the bottom. So Japan is about to rise, and that means everything versus Japan. Let's go to Forex and look at these guys. All of these guys are basically topping out and heading down. So that's NZD JPY, USD JPY, AUD JPY. Notice all of them sitting at the very top of the band about to come down. So while no one else is talking about it, Arbitrage is saying, no, the very next move is a downward move against anyone versus Japan. So just be ready for it.
I'm glad we got that in there. So, Daniel, you got a few things to say about oil, and then we'll jump on to another favorite topic that we usually have here. So,
yeah. So this is more of an interesting potential trade opportunity, and I've kind of had Royce assess this a few times. So if you look at a lot of the news in oil, it's very bearish. So OPEC wants to increase their output, which increase output globally brings prices down. The Chinese economy is shows signs of weakening, which they're a very large consumer of oil, and that also shows price increases. And you've seen oil drop for a very long time now, and it's recently hit some pretty low prices. It went as low as the mid 50s. Now it's kind of holding the $62 area. But if you bring out the arbitrage band on it, it just went into a buy trend. And if you look at things like Exxon, or I'd be
what was the symbol?
Look up CL1 exclamation point. It's the forward rolling.
The futures, crude oil futures. Yeah.
I'm pulling it up.
I mean, so if you look at that, you look at a stock like SM, you look at Chevron, they're all just entering into a buy trend. And if you want to double down on your technical analysis, kind of looks like upside down head and shoulders.
Mm-hmm.
Some of them are hitting a 50% fib retracement from a little bounce from the bottom. And sometimes the best trades are the ones that cause the maximum pain for people.
Yep.
I'm not about to say oil's about to go to $100, but it is we are showing that our indicators say that it's about to go into a buy, and that's the complete opposite consensus of what you read a lot of places. So not financial advice, and I mean I don't think you can give
follow the numbers, not the
financial
news.
advice, but
Yep,
it's an interesting look.
Oh yeah.
I like the indicator at the bottom that is creeping into the green now.
Yep, and that's probability. That's the house. Never play against the house. The house always wins. So there's actually probability of basically the next short-term trend is a buy trend.
Yep, that's what he was saying.
Yep.
Cool. All right, so let's jump into another favorite, especially of Daniel's, and that is Tesla versus Chinese EVs. I thought we were done talking about EVs forever, but I guess not. He's bringing it back up again. What you got, Daniel?
Not till you have one, Darin. When you're driving it, when your BYD self-driving taxi drives you around,
I'm not Warren Buffett, but if we keep having great years at Arbitrage like we are, I might be driving a Tesla. Go ahead, Daniel.
No. Well, you'll get a BYD.
I don't know about you. All the other three of these things belong together. Three things. But one of these guys are wearing a neck chain. No, it's time to play a game.
Josh is a little bit aping him too. Come on, you try to distract.
I think we should all wear necklaces next time, and I can see Josh in the seashell necklace from the early 2000s.
Oh, that's exactly where I was going to go.
I used to have one.
You live in Florida, so wouldn't it be hard for you to find one either? You just go to some rock
across the
street. Next time I'm in Virginia, I'm getting one and mailing it to you.
Yes. No, I would just literally walk across the street.
Okay.
There's a surf style.
I owned one. I was, I remember I was a teenager in the 80s. So, I mean, it was a big thing back then. So yeah, I owned one, as I want to cover this up now. You guys keep going back to it. Anyway,
Kind of hope this
tell us what your
subtitles.
bring us your numbers there, Daniel. Get off the
All
deck.
right, so BYD registered more cars in Europe than Tesla for the first time, ever. And while that's an important metric, it is also important to note that Tesla's sales have been declining in Europe for quite a long time. But BYD's sales increased by 169%, where Tesla's decreased by 49%. And there is a large part of this is that a BYD is, having been in one, like I don't think they sell them in the US, right? They are of similar quality, but and I can't speak to the self-driving capabilities because allegedly they're better, but they're not as nice. It's definitely like, the Toyota version versus like more of like a Mercedes. And so they're able to hit this kind of like mass market, EV appeal and do it at a cheaper price. And with, that kind of coming out, Elon said he'll be stepping away from politics and going back full time to Tesla, which, made the stock a little bit happy. And then on the back of that, BYD said they'll be cutting their prices by up to 30%, on various like cars and models, which tanked all the other Chinese EV stocks. And then, some head of commerce in China said that they didn't like the race to the bottom of the pricing. And so with that, Royce called buying some Tesla lows earlier in the year. And, the stock has continued to slowly creep up, approaching, it's at 361 now. Yep. Previous highs were at 480. Can Elon Musk coming back kind of make, Tesla come back, or do we have to hold out hope on AI and robots for Tesla to reach its, new all-time highs?
Yeah, you definitely hear a lot about the robots. Everybody's going to own one, is what they keep saying now. So, and then when these
Darin, do you think you have a robot or a Tesla first?
I don't know. That's a tough one. Maybe a robot dog first. I don't know. We'll start off small.
Actually, a robot dog would be sick. It wouldn't poop. Or
and also think about it being to where it's armed with ammunition for your house. And when someone's at your door, you send the dog with the camera and ammunition.
Well, I don't live in Memphis, so I don't worry about that kind of thing.
Yeah, exactly. And then that dog, hold on. Then that dog becomes a transformer and can morph into a drone. Anyway, yeah, that'd be all out warfare. The gangs would be using, instead of guns, they'd be using these dogs to go after each other. Oh boy, creative minds want to know.
All right, Josh, real opinion time.
Oh, I'm sorry, that wasn't a real opinion.
Oh no, I was going to say I think Elon definitely needs to come back, but more in the capacity that he used to be. Like, there's even as I understand it, the petition between the majority of the board of trustees and some investors that have signed a signature saying that he's like, they're requiring, based on his, I guess, payout package that he's got negotiated, they're requiring him to come back for like 40 hours a week, just specifically to rebrand. And I mean, more importantly, he needs to rebrand Tesla, because the damage that he's done with this, attaching himself to the politics and Doge, and then him and his tirades on Twitter and his, foreseen Nazi salutes and things like that. I mean, it's not, you can't really run a company like that. I mean, companies are not political, as some of them are, obviously, but typically people's money is not necessarily, they're not going to buy just because of the politics. They're going to buy because of the product. And that's kind of one of the things that BYD does really well is, they've got a decent brand within China, but they, and just to kind of segue, they all have a wider range, and that's kind of what I meant with like the rebranding, just kind of get something different. Like even BYD has like supercars that you can buy, so you get like the high end investors to come in and buy this like souped up car. I think they had one that's like, it hovers around $1 million, but it does 0 to 100 in like 2 seconds. You get some actual
I remember
car
when that came out, and it looks sick.
Yeah, dude, and it does a little bunny hop too. Like you can turn it in, like you can park and turn it into a little dance party. Like, I mean, you get a completely different
transformer
type of investor involved. The coolest car that Tesla has right now is the Roadster.
Yes.
And yeah, that's cool.
They
but
they didn't even come out with the new one that they were like showing a few years ago.
Right.
And the new
and they keep overpromising and
Cybertrucks are cool.
Delivering.
Yeah. Yeah.
No.
Yeah, they are.
No.
Beauty is in the eye of the beholder.
No.
You notice he brought up the
That's why we don't behold a lot around here.
He you notice he brought up the whole Nazi salute thing, even though that's been debunked, but we'll let that slide. Although we didn't.
We're getting political.
No.
First blood. That's Rambo for those that don't know.
Okay.
All right. Yeah, let's move on before we get into one of those. It's after 5 anyway, so let's move on to. We've already done the crayon, so we don't even have to do that now. But
Yep.
We do need to figure out, Daniel, since you've had 3 weeks to think about it now, what is the stock?
He should be able to pick 3, and we have to basically get the best 2 out of 3 and win.
No. You
Darin, you're at least
you each get one, and for every one that you guys miss, I get the point.
That's right.
Wow.
Kicking butt, taking names.
So what Kathy
All right,
would
we'll
talk
do,
this week?
You know what, Darin?
Yeah, is it going to be Kathy Wood? You going to do AMC?
I'll do you one better. And I'll let you pick.
You're going to do Palantir, aren't you? What are you going to do?
What
are some other millennial stocks? He's going to go look.
Because I got you messed him up.
I did. I don't care. All right, you can pick between American Airlines and Blackstone.
Okay.
AAL or BX.
Okay.
What was the other one?
AAL or BX, Blackstone.
Oh, wow.
Boxa did big today. I think they jumped today or something, didn't they?
They did not.
Okay, let's see.
Might have been. I thought it was Box.
All right.
Oh, let's do Blackstone.
And what was the BS?
BX.
BX.
It's definitely
Same
BS
thing.
Blackstone. Because it is. They came out of BlackRock world, so yes.
Company or something like that.
Yeah. Let me talk about where they came from. BlackRock. Ugh.
BlackRock, Blackstone, Ooh. Okay.
Nope.
All right, I'm going to the other screen. What?
All right, which one, Darin? Which one do you want?
Between which? Blackstone?
Blackstone. I would personally pick Blackstone only because it has a bigger range.
All right, let's do Blackstone.
So you didn't care what I had to say, so go ahead. I mean, that's usually the way.
Well, what do you want? What do you want, Darin?
What do you want?
Because I would. You want
Palantir? You want Palantir?
No, I don't want them either. You would never get me to pick Blackstone or BlackRock though. As long as we're here, I will not pick those guys. Just on principle alone.
Get some Andrew.
American Airlines is like Ford. They stay in this little bitty box about like this forever.
All right. So which one?
Okay, what's the range, Royce?
I'm ready
to Blackstone.
I mean, I guess we're doing Blackstone. I mean, not me, but I mean, I'll do it, but I have to. So.
I mean, you don't have to. You can always, be that guy.
You could forfeit.
Yeah, right.
I mean, it looks like that's the only reason I don't have a win because I've been forfeiting every week. I mean, or else I'd have.
All right, Darin. You know what, Darin? I will let you pick first. I'm
gonna bring up the scoreboard. Now I get the pity thing. Look, here we go. I brought the scoreboard up. Here's the scoreboard. Here's
this
the scoreboard.
is tough love.
But this is an important week because we have a tie between the apes and the quantitudes, and it's at 6-all. So
there you go.
And then we have a tie.
No.
Daniel
Sorry,
and
you got
Josh.
that wrong. You got that wrong. We quantitudes have 6, and Josh have 6. You didn't even make the board.
Oh, here he goes. Wait a minute. Wait, do I get combat pay? Is this classify me for combat pay extra pay on my check every week?
I'm like, where's the lie, though? Where's the lie? Where's the
Making fun of the guy when he is just squished into the concrete. Nice.
Hey, you should always Kiko man when he's down.
Yeah.
Kiko man.
Just scrape him off and throw him to the side.
That's why you give someone soy sauce, when they're down, because you always Kiko man.
Kiko man. Yeah.
Jesus.
That's what you should. You know what? That's how we should start ours. We should start our shows now with jokes like that. Move on. All right. So what do we decide? Do we have the? Do we have it up? We have Blackstone. Ugh.
We have Blackstone, and it has a range from about 130 to about 155. So there's a lot of range in there.
Oh wow.
You could just do 150 and then go.
Let's get one that's divisible by 4.
Okay.
Well, 55 would be some messy numbers, but
yeah. So let's if we're going from let's do
152. 152
to 152. Sure, why not?
Yeah.
130 to 152.
So $5.50.
So no, that means from 130 to 152, that is 32. No, 22. What is that? 22? Who's giving us
22.
these numbers?
22. I mean, we can go to 20. Just make it a 130 to 150.
That's what I'm saying. Like,
yes. Let's make it back.
That's what I suggest.
So
right.
30, 35, 40, 45, 50.
All right.
35 and below, 40 to 35, 45 to 40. And then everything above 45.
Yep. And since I was bequeathed the first pick
First choice
in the draft this week,
Woo!
I shall go with, it's coming off the bottom there at the bottom, but it's also coming down. So, nope. Look at him. He's changing it all up. He doesn't want me to see. Look at him. This is a tactic. He keeps changing the time frames on me. This is why he wanted me to go first.
Now he's just clicking around.
I'm just showing you all your options.
Yeah, way too quickly though, on purpose.
Yeah.
Life's fast, Darin. Keep up.
We settled. Okay, here we go. We settled on the 2 hour. So which is
That's what you
is
normally
fair.
play at, right?
It's fair for a week. I think that's fair. I mean, or even 30 minutes for a week.
I'm saying, I'm just was trying to pick one that was slow enough for you. Slow enough.
Oh, here he goes. Now it's a slow thing. Nice. And all the crowd laughed. Johnny was such a bad boy.
And the church said,
Right,
amen.
Pick Darin.
You know what I'm going to do? I'm going to stick it right at 135 to 140. That's mine.
135 to 40. So that way it's already in his range. That's
Yes.
fair. He needs those tennis balls on his walker to
No.
there.
I think you intentionally gave me a confusing one because we have a green arrow and red SAR dots, and it's on 2 hour. So,
But that's where you normally play. When you're doing your picks of the day, that's where you're normally at. I would
no, it depends
intentionally for your
you're talking about
2 hour
2 hour
chart.
time frame.
I don't use the 2 hour chart for anything.
I move it down to 30 sometimes. It just depends. I have to go back and forth.
Sometimes. All right, I'd go down to 30 for you. I'd go down 30.
No, I'd rather have the daily. Show me the daily.
The daily is the least. Oh well, okay.
Helpful in the short term, right? It's the least helpful.
Yeah, because basically it's almost a 3-month evaluation that you're playing with, as opposed to a 5 to 6 day.
Well, you show me enough.
Hey, if that's where you feel comfortable, you go.
No, I was gonna go below 140 anyway. It's just a matter of which one. So I'm gonna do the 135 to 140, and be done.
Okay, 135 to 140. Okay.
Who's next, Daniel?
I'm next.
Absolutely.
I trust Darin to not pick my range. Neither of the other guys.
Ouch.
Yeah.
I want the upper range.
The top or the next
up.
140 to
the top. Wait, sorry. What is it? 140
to 145
145.
or 145 to 150.
I want 145 to 150.
Yep.
Okay. All right. And then let the next person go next.
Oh, well, it has to be Royce. Royce had a good year. I got to make sure I have a good year.
Hey.
Are these going to be in the reviews?
And you're right underneath you.
Sorry, Josh. You don't pay the bills.
All right, Josh.
But hey, you're in the lead.
You and me at the bottom, Josh.
You're in the lead. It's you know. That way, if you win, you can say, "See, it's not my fault. It's not my fault."
I think
Sorry, Josh. I knew if I let you go second, you were gonna pick one of the upper ranges I wanted. So
whatever Royce picked, whichever direction he was going, yes, that's where Daniel was sure to go. He wasn't going to go the other way. That's for sure.
I'm gonna text Trump and tell him to announce tariffs on gas grills.
Gas grills.
How does that affect Blackstone? We have to have housing, and you know what? We need the CRE Black Swan to finally happen. That's what we need for Blackstone to go down. So we'll wait for that.
You can't tell me if you don't. You can't tell me if he doesn't post about a tax on propane grills. Everybody's gonna be like, all these rednecks in my Blackstone.
Come on, and not knowing what the stock is, I got you.
Mm-hmm.
All right, guys, we'll end on that note. Coming out of a Memorial Day, we had
Josh, may you have the black swan that we need.
I'm gonna need a miracle.
These connect.
I like how for Josh to win this week, we hope for like financial collapse. like that's like potentially what we need for Josh to win is like, oh yeah, like the next depression starts.
Yes.
Yeah.
And Josh, you have only yourself to blame.
Black Swan, Black Stone.
And he'll be a winner.
I'm a victim of my own success.
Oh, remember, no, that's not true because
it's a hard life.
We make money on the way down.
Yeah, when the stock market doesn't go your way, just go Morgan to Morgan.
No relation.
Morgan.
Yeah, not that Morgan to Morgan. You and your wife. Hey.
That's what it is.
Oh yeah.
All right, guys, let's get out of here. Time's ticking. Let's get out of here.
All right, I guess if we gotta go.
Hope you enjoyed this, Uncle Bob. We'll see you guys next week on After the Bell.